Last month, the market anticipated a weaker NFP report, hoping it would prompt the Federal Reserve to consider another rate cut. But guess what, the December non-farm payrolls came in stronger than expected and triggered massive volatility across Forex, commodities, and US stocks. As we all know, when data beats or misses expectations, it can spark huge market reactions. That's why in this video, I'll break down the predictions for the January NFP and explore where financial assets could head in response to the data. The January NFP report will be released on February 7th, at 4:30 p.m. GMT3, stick around until the end of this video to fully prepare for what's coming next. Before we get started, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. The December NFP report exceeded expectations for the second month in a row, with 256,000 jobs added, while the unemployment rate dropped to 4.1%. However, wage growth came in slightly weaker than expected at 0.3% month-over-month and 3.9% year-over-year. Immediately after the data release, the US dollar index surged to multi-month highs while gold prices dipped instantly but quickly rebounded as the market digested the report. The US stock market also took a hit, with all three major indexes dropping over 1%. In contrast, crude oil prices rallied and climbed more than 3% as a result of the robust employment figures. In the upcoming NFP report, the market expects job growth of 154,000, while the unemployment rate is projected to remain at 4.1%. Additionally, average hourly earnings are expected to rise 0.3% month-over-month and 3.8% year-over-year. A stronger than expected NFP report could reinforce the Federal Reserve's stance on keeping interest rates higher for longer. On the other hand, a weaker job data may increase expectations for monetary policy easing. Now, how might the NFP data influence the financial assets? Let's dive into the technical analysis of four key assets that could be highly volatile around the NFP data release. Stick with us until the end for some exciting trading opportunities. Now, let's look at the US dollar index. A strong NFP report would likely boost the US dollar, as robust job growth and rising wages could strengthen economic prospects and consumer activity. Conversely, a weaker than expected data may pressure the dollar and lead to its depreciation. In the 4-hour chart, key resistance levels lie between 109.54 and 109.88, while the demand zone is around 107.74 and 107.40. Next, let's analyze GBPUSD. If NFP and wage growth exceed expectations, the US dollar could strengthen, putting downward pressure on the British pound. Additionally, the UK's economic conditions and fiscal policy are likely to continue challenging GBPUSD. Given strong US job data and uncertainty surrounding the UK's fiscal policy, GBPUSD may struggle to gain momentum and could remain under pressure. In the 4-hour chart, resistance can be spotted between 1.2521 and 1.2573, while the demand zone is around 1.2227 and 1.2159. On to the next, gold. If the NFP report beats expectations, the demand for gold may decline and can lead to a potential price dip. However, if the job data disappoints, investors may turn back to gold as a safe haven asset. Additionally, ongoing US pressure on global trade could further fuel uncertainty and drive demand for gold even higher. In the 4-hour chart, resistance is between $2,847 and $2,854, while the demand zone sits around $2,786 and $2,778. Finally, let's take a look at the US stock market. The S&P 500 tends to perform well when NFP data is strong, as it signals better corporate earnings potential. However, if a strong job data drives the Federal Reserve to keep the interest rates high, US stocks could face downside pressure. On the other hand, weaker employment numbers could fuel rate cut expectations, which can potentially support further gains in the US stock market. In the 4-hour chart, resistance is between 6,087 and 6,128, while the demand zone is around 5,903 and 5,873. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.